Hello traders, what's going on? In the previous lecture, I have discussed about the basic formation and characteristics of engulfing candlestick pattern on a price action chart. From this lecture 1, we will learn another strong candlestick pattern, that is the piercing line candlestick pattern. So in this lecture today, I will be talking to you about the basic formation and characteristics of piercing line candlestick pattern on a price action chart. So let's start. When a rally of bearish candlestick fall down from top of a price action chart, then the new candle, instead of forming current candle closing price, it open a few pips below the previous candle closing by creating price gap. And then the current candle turn into a bullish candle price above at least 50% of the previous candle body. And candle get closed by staying above the 50% of the previous candle body. Then this candlestick pattern is called the bullish piercing line candlestick pattern. You will find this candlestick pattern at the bottom of a price action chart. On the same way, when a rally of bullish candlestick rise up and the current candle close, then instead of a new candle forming at the current candle closing price, the new candle open for few pips above the previous candle closing by creating price gap. And then the candle turn into a bearish candle price falling below at least 50% of the previous candle body, and candle get closed by staying below the 50% of previous candle body. Then this candlestick pattern is called bearish piercing line pattern. You will find this pattern in the top of a price action chart. Now if a bullish piercing line pattern appear at the bottom of a price action chart, then chances are high that market will rise up. You should make sure that piercing line pattern is valid. Then you can look for new candle. In this time you can set the long trade entry at the opening of new candle, that set your stop loss at 3 pips below the piercing line low, and set your profit target double size of stop loss. On the same way, if a bearish piercing line pattern appear at the top of a price action chart, then the market trend is go down. You should just make sure that piercing line pattern is valid. Then you can set the short trade entry at the opening of a new candle, and then set your stop loss for the 3 pips above the piercing line high, and set your target profit at least twice size of a stop loss. Let's see the real chart example. This is Euro USD 4-hour chart. As you can see that bullish piercing line pattern at the bottom. That means bullish candle open 15 pips below the previous candle, and then current candle turn prices 50% above the previous candle body, and this candle also closed above the 50% of the previous candle. So this is the valid bullish piercing line pattern at the bottom. So let's trigger a long trade entry at the closing price of a piercing line candle, and set your stop loss at 3 pips below the piercing line low, and set your target profit at least twice size of stop loss. Another real chart example. So this is the Euro USD 4-hour chart. Now you will notice that a bearish piercing line pattern at the top. The bearish candle has opened 15 pips above the closing of the previous bullish candle, and piercing candle has closed as 50% of the previous candle body. So this is the valid piercing line pattern at the top. So let's trigger a short trade entry of the closing price of piercing candle, and set your stop loss at least 3 pips above the piercing line high, and set your initial profit target for the twice size of stop loss. So not more today. Have a nice day. Goodbye.